Moving on, it's now time to take another one of our favorite fast money games and turn it on its head, because that's what we do. It's the ultimate edition of Would You Rather. We are asking the traders to choose a host of different big caps versus the 6-month Treasury, which is yielding 5.557%. Very attractive. So let's get our boards out, jump right in. Would you rather, Tim, 6-month T-bill or Disney?
So, I mean, I guess the calculus here is really, it's a 6-month time horizon. Where's my total return going to be? I know what the bogey is on the 6-month bill. I think it's going to hold these levels. I think Disney, which is so beaten down, is going to outperform. I'm going Mouse House, and that's a decent little, it's not bad, right?
Yeah, probably copyright infringement, but it's great.
Okay,
It's great. The Mickey's very good.
Thank you.
Disney. How about 6-month T-bill, Karen?
Yes.
Or JPMorgan?
Well, okay. Even though I do own 1-year JPMorgan for a couple of reasons.
What's it say in the upper corner there?
It just says, hi, Jamie, just in case he's watching. Probably not.
Oh, he's watching.
Yeah.
No, it did a heart over the eye.
Okay. I think that, it has just under a 3% yield, which is not that far off, as well as being at under 9 times earnings. So for me, I feel like I'd rather, and I have more money, sort of where do I have more money in JPMorgan than I do in Treasuries.
This next one's an interesting one. 6-month T-bill or Nvidia, Bonawyn?
Let the eye rolls ensue. So I picked Nvidia, and the reason why is because...
Your board, please.
Oh, yes. Sorry.
Thank
My
you.
goodness, yeah. I know. Dropping the ball. Shedded it. So I'm picking Nvidia here because you have to pick your spot somewhere, right? And I've come up here and I've said, listen, I really think that it's very attractive to be investing in treasuries, but you can't completely run out of equities and only be in this singular asset class. And for that reason, it's in line with the barbell approach. I still think you want something that's going to give you that upside growth, and I think Nvidia still offers that in tandem with T-bills.
I'm gonna ask Karen her opinion because you own Nvidia.
I do. I own Nvidia.
Or T-bill.
I own Nvidia. I own a lot more treasuries, but the risk reward is obviously very, very different. I agree with everything you said. I think it's an interesting way to look at it, to think about you have to be. I do believe the AI story, and I do believe we always talk about picks and shovels. That's where you want to be.
All right. Here's one for Guy. 6-month T-bill or Amazon?
Okay, I'm going to channel my inner Rick Sand. Do you see what I did there, Mel? Can you see that?
I don't see anything.
It's hard to see that. That's unfortunate. I mean, no, it's Guyana, Colombia, and that line there, that's the Amazon River. I mean, that's actually dropped to scale.
Obviously. Yeah.
You're not happy about that.
You can barely read.
Well, I mean, that's
it's
because
not your fault, though. It's
no,
the
because
pen,
Miles gave us really bad pens. I'm just throwing Miles under the bus. So Amazon reports around Halloween. I'm betting that they will report one of those ridiculous quarters where you see a 15% move in the stock over the last, over a few day period of time. So I get the T-bills. I get why that's safe, but I think Amazon might be hair triggered here.
Okay. Here's a bonus round. This is a very interesting question. Would you rather 6-month T-bills or the 10-year?
Oh.
So there is risk in duration. So what would you choose, Tim?
This is a complicated question because there's 3 or 4 levels to it. There's a duration element of it because I actually think that there is still some risk in duration and moving out the curve. I look at the short end of the curve, and I do think in 6 months that's going to have come in. So I realize you're not really seeing much capital appreciation in your T-bill, but I'm going to say the 6-month T-bill because I think not only do I feel comfortable, and in the next 6 months I think we're going to answer a lot of questions on where we're going. It's possible we still go higher on rates, not at the short end, in the long end.
Yeah, Karen.
I agree with Tim. I mean, something terribly, terribly bad has to happen for the short end to go dramatically down. So I'm gonna stick with the short end.
Bonawyn?
Yeah, I'm going to be with the 6-month as well, but I just want a little bit more dexterity and optionality here. I don't want the duration risk. And if things do really roll over, I do want to be able to kind of monetize and then redeploy rather than taking the mark-to-market risk being tied up in 10-year.
I guess the question embedded here also is, do you think that there's going to be a reversion in the 10-year in the short term, right?
Sure. So you could make some money in the long end.
You can make exactly. So that's
even if you're near the
6 months,
the Amazon River. Or
I got to tell you something. I'll get a close up of this because it's actually brilliant. I'll play your reindeer game and say the 10-year, because I do think although 10-year yields could probably trend up a little bit from here, if the market sell-off that I think is going to happen, it's going to drive yields lower, which the appreciation in owning the underlying asset will go up.
Right.
Is the flight to quality the short end?
I think it'll be in the form of the TLT. That's just my view. So I'd rather be in the TLT.
Is 20.
Did I just get a ding?
No, that was my shoe.
Oh. I was going to say, man, that's great.
Look, if the ding fits. You know.
No.